Welcome to today's in-depth analysis on financial developments. Even though the Indian stock markets were closed today, there is still a lot happening around us that could impact the trading floor when it reopens. Most notably, the Iranian missile attack on Israel has created waves across the global economy, especially in the commodities market. This attack has sent oil prices surging, and that's a huge deal for an economy like India's, which is a major importer of crude oil. Brent crude, which is the global benchmark, shot up almost 3%, while U.S. crude prices followed suit. What does that mean for us back here? Higher oil prices can contribute to inflationary pressure and can disrupt the balance of the current account deficit. The increased costs of oil could potentially have a cascading effect, driving up transportation and manufacturing costs, and eventually impacting retail prices. For an economy that's still recovering post-pandemic, these fluctuations in oil prices are certainly something to watch closely. But let's zoom out and look at how the Iranian attack is impacting the global scene. Investors are in a state of risk-off, meaning they are looking to move their money to safer assets, given the geopolitical instability. That's why you're seeing a rush to gold and U.S. Treasury bonds, which are often seen as safer havens during times of uncertainty. Stocks globally are reflecting this fear, with the U.S. indices like the S&P 500 and NASDAQ opening lower. Despite the geopolitical turbulence, there is still a silver lining that investors are holding on to. The Federal Reserve, which recently hinted at potential rate cuts, is expected to lower interest rates by about 25 basis points come November. This is great news for the equity markets, as rate cuts usually spur borrowing and investment, injecting liquidity into the market. The anticipation of this move is giving some hope to global markets and providing a counterbalance to the current instability. Meanwhile, on the other side of the globe, China is seeing some surprising and positive developments. The country's recent economic stimulus measures have injected a surge of optimism, pushing their markets higher. This unexpected uptick is influencing global markets as well, particularly in Asia, and could have ripple effects for international investors looking for opportunities. Let's not forget the commodities scene. The volatility in the Middle East is obviously impacting oil, but it also influences other commodities. Gold is usually seen as a safe haven asset, and as tensions rise, it has gained attention. While prices have dipped slightly amidst fluctuating market conditions, the demand for gold as a stable asset is on the rise again. Keep an eye on how these price movements affect investor strategies, as shifting demand for commodities like gold and oil has far-reaching consequences on economies dependent on these resources. All in all, it's been an action-packed day, even if the Indian markets took a breather. As the world grapples with geopolitical tensions, economic policy changes, and market shifts, there's no shortage of developments to keep an eye on. Will the anticipated rate cuts by the Fed help stabilize the markets? How will India react to surging oil prices and the ripple effects of geopolitical tensions? And will China's market uptick hold strong amidst the global turbulence? That's all for today's episode. Stay tuned for more updates, and remember, the financial world moves fast, but we've got you covered with all the insights and news you need to stay ahead.